everyone, how are you? This is Kay, good to see you. And welcome back to another video on my YouTube channel. So today I would like to share my trade performance from January to March 2025. I have recorded my trades in Excel spreadsheet, so based on that I will share my overall trade performance and also how I took entry and exits. And also I will share one of my trades, how I executed the entry, so that you have an idea of how I trade when I see an opportunity in the market. And if you want to learn more, then there is a link on the below description where you can see the free KT's course. You can click the link and you can have some free videos so that you know exactly how I do the trades. So first, let me share my Discord group. This is the Discord group of KTS Academy. This is where you can also learn my strategy deeply and also Ichimoku knowledges. And here I share my trade performance. And here, performance in January to March 2025, my overall win rate was 36.67, which is average to me. I usually have win rate of about 30 to 40%, like I mentioned for the last videos. But so 36.67 is about average, I would say. It's not so good or it's not so bad. And when you think about the win rate, then you think this is too low. But it's okay for me because I focus more into the risk and reward ratio in terms of trades. So you will see how I exit the trades and you see how small the drawdowns are. So this means that I'm a trend follower, so I only enter the market when the trend is there. When there's no trends, then I never enter the market. So when I enter the market, when trend is there, the market tends to go towards my way and I make profits. However, after the entry, if the market retraces, then I exit very quickly. Sometimes I exit even like 10 or 20 pips. So that's why my win rate is really low. I don't exit when the market goes down, when the market goes against me for like a 30, 40, 50 pips. I don't really do that. My exit is very quick so that I have smaller drawdowns. But when it comes to winning the profits, I trial as long as it goes. So that's why, and I'm a trend follower, I'm always into the trending market. And that's why whenever I make profits, it becomes bigger than the losses. So my win rate was 36.67%, and my profit factor was 4.38 in average throughout the 3 months, January to March. So profit factor is gross profit divided by the gross loss. So basically this is the win and loss ratio. So I have 4.38. That means my risk reward is 1 to 4.38. So that's this is, I would say, good performance to me. And also my return was 22.8% total within 3 months. So that means in average per month was 7.6%, I think. So yeah, that was my average win rate per month. I got 22.8% return for 3 months between January and March. And this is the graph. So as I emphasize every time, you have to draw the N wave, in bullish N wave on the graph. You can look at your own stats or your own performance and pull up the chart, pull up the graph. And if the graph looks like this, that means you are a gambler. You won't be able to make profit in the long term, but you oftentimes, this is the graph that people usually have. Or if you have the graph like this way, descending N wave, reverse N waves, that means the more you trade, the more you lose. So when you see the graph like this, then stop trading and practice. But so the best scenario to draw the graph is N wave. So as you enter the market, you won't be losing, you won't be winning. You have break-even trades, but once you win the market, then it covers the previous losses. Then as it goes on, you enter the market and you go sideways, you have very small drawdowns. But when you make profits, it covers the previous losses. Then it goes on like this. So once you capture the profits, then it covers the previous losses and it goes on. So this is the graph I oftentimes draw every month and every year. If you have seen my trade performance in 2024, then you see this graph as well, overall, throughout the year. So this is something I wanted to also mention, that N wave. Please aim for N wave for drawing the N wave on the graph is important. And in this spreadsheet, please don't focus on the price part, because this is my deposit. I'm trading with $1 million starting from 2025 January. But more important numbers are win rate, and PF, and also return, and plus R multiple as well. So please don't focus on this one, because this depends on how much depends on how much you have, and how much you win, how much you lose also depends on how much you have. So please focus on the ratio part whenever you review your own performance. And here is, hold on, let me squeeze, and this is my overall trades. Within the 3 months, I have taken 15 trades, and I have been trading. So in the month of January, I took only 1, 2, 3 trades, and in February, I took 1, 2, 3, 4, 5 trades, and in the month of March, I took lots of trades. I took 1, 2, 3, 4, 5, 6, 7 trades. So total, I took 15 trades between January and March. And the most profit I was able to take was pound AUD, which I took on 26th of February at 1 p.m. UTC. I took that entry, and I got the profit of 206 pips, and also 191 pips. So every time I take 2 positions, so that's why, and 2 positions, and the take profit timings were different on these 2 positions, but they are executed at the same time. At 26 February, 1 p.m., I executed at the same time, then I took profit in different timings. So that was my biggest win. The rest are small. I think basically the rest were 11 pips and minus 8 pips and 23 pips, minus 5 pips, and 66 pips was also okay. Euro CAD, which I took on the month of March 3rd, 66 pips times 2, and minus 17 pips drawdown, and 21 pips of profit, and minus 39 pips, and 28 pips of profit, and 28 pips of minus, and minus 19. So yeah, overall, I would say the impression was that I did see lots of trends, but I wasn't there. That's why I was only be able to make this profit on pound AUD. And also, I remember, I think it was in the month of February, or I think it was March. Huge trend happened in Asian session when I was sleeping in Dubai time, so I wasn't able to capture. But anyways, we can't monitor 24 hours every day. So whenever you find opportunities, you take entries. So I'm also the same. I don't capture every single entries, every single opportunities. Whenever I open the chart and when I see the market opportunities, then I simply enter trades. Otherwise, I walk away. And whenever I have time in a day, at least 3 times per day, I check the charts and look for opportunities. So, and also, if I mention about the drawdowns, like I mentioned, whenever I enter trades and when the market retraces against me, then I exit very quickly. And so this is the drawdown column here on the far right. And so one of the entries was I only got 0.23% times 2. So that was 0.46% in one trade was the drawdown. So this was even much less than 1%. It was even less than even less than 0.5% drawdown. So please keep the drawdown small is the really key to success also. This is a part of the risk management. Other trade I took 0.27% times 2 drawdown. And other trade was 0.45% drawdown times 2. And 0.66% drawdown times 2. And 0.72% times 2. And 0.46% times 2. So these were the drawdowns I got. So this is, no matter how much you have, no matter how much I have, this drawdown percentage will be the same. If you keep the strategy and rules based on discipline, then you can keep these drawdowns as minimum as possible. And that's the very key to success as well. We tend to focus on making profits, and I was also the one. I didn't really care about the risk management when I first started my Forex journey. But then I realized the importance of the drawdowns. If I, let's say, injured, if I bleed too much, then it takes longer to recover. So if you minimize the drawdowns, then in the future, when you capture the profits, then it becomes easier for you to recover. So don't let the loss run by itself. Whenever you have a drawdown, then you also have a strategy to exit quickly, logically, and rationally, and objectively. So let me show you one of my trades, which I took on CAT JPY here on 16th of January. So let me click the link here, and this is the one. CAT JPY sell on January 16th, and entry on 108.178 with a stop loss of 40 pips. Oh, by the way, it's also important to journal your trades like this way. Every single entries, I also recommend you to take screenshots so that in the future you can look back and you can find the area to improve your trades. You can also make comments like this, then you really see the improvement on yourself. And also you're able to remember what you have done in your trades, and that's also a big lesson for you too. So I make memos on every entry. So this is a CAT JPY sell on the 16th January, and entry on 108.178 with a stop loss of 40 pips. 40 pips of stop loss is in average to me, like 30, 40 pips of stop loss is okay. But when it comes to, let's say, 70, 80 pips, then that's too wide for me. And the trend confirmation 4-hour and 30-minute time frames. So like I mentioned previously, I'm a trend follower. So I always enter the markets whenever there are trends through Ichimoku. So this is a screenshot when I enter the market. 4-hour is upper left. This is 4-hour, and it was down. And not only that it was down, but also there was a support levels breakout. So I thought this is good market to trade. And Kumo was bearish. And Tenkan-sen, Kijun-sen are both downtrending. And Chikou span, the yellow Chikou span, has been below the candles. So I saw a nice bearish momentum here. The only concern was the 4-hour Kumo to be a bit thin. So this was a bit oversold. The market may have retraced, but it was okay for me to enter the market. Because if you look at the 30-minute time frame, the Kumo was looking very nice. Let me hide my camera so that you can see the whole chart for now. Yeah, so as you can see, the Kumo here has been bearish. And this Kumo is not really thin like 4 hour. The distance between the Senko span B and Senko span A was quite wide. And also, the market has been beautifully resisted by the Kijun Sen. There was a one time of the overshoot over here, but recently as well, as the Kijun Sen itself was going down, the price has been resisted by the Kijun Sen. And the market has been forming descending P wave. This is called descending P wave breakout structure as well. So I see multiple reasons to sell here as price action patterns and also Ichimoku confirmation. But just because I see downtrend like this, I don't enter the market right away because I want to be more precise exactly which timing to enter the market. So then I check the 5-minute time frame to capture that. Here's 5-minute time frame screenshot, and I see downtrend as well. Every time I see the market, I look for the reasons to enter a trade. I never use my gut feelings, or I never use intuition or a sixth sense or whatever we call it to enter the market. All the entries has to be logic. So this is called band walking, is one of my entry confirmations. And also I found, let me see what I mentioned, just hold on, it was a while ago. Confirmation by support, breakout, in stochastic dead cross and band walking. Yeah, stochastic was being dead crossing and band walking, and also the support level breakout. Or that's why I draw the horizontal line like this on 108.326. The support level broke bearish and band walking, and stochastic has been dead crossing. So what this means is that, again, 4-hour overall bigger picture market was down, and 30-minute time frame was also down. This is called confirmation phase. If you took my free KT's course, then you know that I do this also. And then in terms of the entry, I took these confirmations, band walking and dead cross and support level breakout on the 5-minute time frame. And what that means is that, of course, I expect the market to go down from here, but in case if the market retraces, then most likely it's going to be resisted by the previous support, then go down again. But if it breaks here, then most likely I will exit the trade. So that's how I plan my trade every time. My sell position was 108.178, and my stop loss was 108.567. I took 38 pips of stop loss, and from the entry to the stop loss, I always risk 2%. Depends on the market condition, I change. Sometimes I take only 1%, or sometimes I take 3-4%. But in this particular situation, usually I take 2% risk per trade. So that means if you have $10,000 account, and if you enter the market like this, then you're risking $200 of your asset. So that means if the market goes up and hit the stop loss, for example, then you will lose $200, 2%. So then if the market retraces, and in case if the market breaks the previous support level, which was my confirmation for this particular entry, then I will lose around 1%, right? This is halfway to the stop loss, so I will most likely lose around 1%, and that's how every time I plan my trade. So stop loss for me is like a seatbelt on the highway. Anything can happen in the market in any seconds. Whenever there's big news, surprising news, except for the fundamentals. Besides fundamentals, I mean, there may be some some big surprise among the markets in the world happens, then all of a sudden the market shoots up this way and it just goes. So to prevent from a huge drawdown for me, I put the stop loss. But it doesn't mean that I keep holding until the price hit the stop loss. Stop loss is, again, the seatbelt on the highway, but I will most likely exit before the price hit the stop loss. And that's why my drawdowns were kept really small. As I mentioned here on this history, 0.23% times 2 and 0.27% times 2. My drawdowns are very small in this reason. So again, coming back to this trade, so this is when I enter the market, the screenshot. Make sure that there is no big news ahead also. That's also important in risk management. Then what happened after this was that this is the screenshot from my MetaTrader. And I took the screenshot on the phone. This was, again, where I entered the market. And the market went towards my direction. So as you can see, this was my sell price. And now you see the stop loss is below my sell positions. And what that means is that in case, again, in case, right, we can control the market, so we have to always be aware of any accidents or any occasions. So in case if the market retraces all the way, when you are away from the market, then it hits the stop loss, which is below the position. So what this means is that I don't lose anymore. Even if the market retraces and hit the stop loss, I don't lose. And that's why I call this strategy as break-even line. Break-even line is one of my core strategies to maximize the profit and also minimize the risk per trade. Before you set the break-even, like this, in this situation, right after you enter the market, your stop loss was here still. So that means your trade is still win or lose. Win or lose. It's still not sure. I mean, you captured the downtrend in 4-hour and 30-minute chart, and M5 is also down. You get multiple confirmations. So most likely the market goes bearish. But again, anything can happen, and that's the market. So in case if the market retraces, exit, you're going to lose, right? So this situation is win or loss, win or lose situation. But as soon as you move the stop losses below your positions in this case, then this game becomes win or break even, right? And if you keep playing the game of win or break even, then you win overall. I think you can understand this concept, because the worst case scenario in this situation is break even. And if the market goes your direction all the way, then you win, right? So it's either win or break even trades, which everyone wants to play, which you want to play. So that's how I set up my risk management as well. I move the stop losses actively to break even and trail the profits. And for this trade, as it turns out, the market retraced and I exit with a break even, as I mentioned down here. So, but which was okay. I mean, break even do happen. If the market doesn't go my way, then if it hits the break even, then it's okay, because I don't lose anything. So I simply look for another opportunity to plant the seeds to see if it grows. So that's why on the spreadsheet over here, the result on CAT-JPY was break even, as I stated here. And since I take 2 entries, you see 2 entries over here, and you see 2 break-even labels over here as well. So I have, this was the very first break-even trade in the month of January. I had 1, 2, 3, 4 break-even trades. Win trades were 1, 2, 3, 4, 5, 6 times. And the rest of the trades were losses. So I have much more losses than the wins. And I count break-even as a loss in the graph in the performance spreadsheet I shared with you earlier, this break-even number 7 is counted as a loss. So that means I had 11 times of winning trades, and 12 plus 7 equals 19 times of loss and break-even. And that's why also my win rate is usually a bit lower. I take the break-even as losses because so that my performance becomes more strict, and I can exactly see what was my win rate, my pure win rate. I want to see that. And that's why I count break-even as loss, losing trades. But that was my monthly performance since January to March. I haven't been sharing this performance till now because I have been trading with some other strategies by using Ichimoku, of course, but I was more experimenting other strategies by price action, by 5 lines, by time cycles, by Kyushu Ashi, and some other strategies. And it was quite fun for me. It has been quite fun for me. So that's why I took time to select which trade I took by my strategy, trend follow strategy called KTS. But yes, so that was my trade performance. And I also have the trade performance in the month of April. So I will share that with you as well. In terms of my trade on gold, that was not by KTS, so I'm not sharing this one on the spreadsheet, but I will share my performance again as well in the months of April and onwards. Because I have been getting so much request that you want to see my performance by KTS, so I will continue to do that. So sorry for the delay, but I hope you enjoyed this video. And if you want to learn more, deeper level, and if you want to master the strategy like this, including entry and also exit and break even and everything, then there is a GTS class, which is coming up in July 2025. This is the 3 months intensive program only for within the few members. We meet face-to-face online, and I share and you master my strategy one by one. So if you're interested to join this one, please let me know by email. The email is actually mentioned on the below description, so you can check that one. And I'm happy to give you more details. So thank you so much for watching this video, and I hope to see you again soon. So till then, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you so much.